We all know Pepsi, right? Doritos, Gatorade. These brands are everywhere. But what if I told you the company behind them, the giant PepsiCo, has actually been stumbling? Well, today, we're diving deep into the case from activist investor Elliott Management. They believe this consumer powerhouse needs a serious shakeup to get its magic back. So here's how we're going to break it all down. First, we'll get a refresher on just how massive this company is. Then we'll dig into Elliott's diagnosis, what exactly they think has gone wrong. After that, we'll look at their fix, their prescription for a turnaround. And finally, we'll explore the massive opportunity they believe this whole plan could unlock. Okay, so first things first. Let's just set the stage and talk about the titan at the center of this whole story, PepsiCo. Now, we all know the brands, of course, but the scale here is, well, it's just staggering. PepsiCo isn't just a player, it is the player. It's the #1 name in snacking across the entire globe. Think Doritos and Lay's, and it's #2 in beverages right behind you-know-who. With over 20 brands that each on their own pull in more than $1 billion a year, yeah, this is an absolute giant. And this powerhouse wasn't built overnight. We're talking more than a century of really bold moves. It all starts back in 1898, but the real game changer was in '65 when Pepsi-Cola merged with Frito-Lay. Then you have the legendary Pepsi Challenge, a marketing masterstroke, and they kept making smart buys, like Quaker Oats, which brought Gatorade into the family. This is a company that knows how to evolve. So, if PepsiCo is such a legendary success, why on earth is an activist investor like Elliott Management getting involved and calling for big changes? Well, that brings us to the diagnosis. What's the problem? This chart. Wow, this chart tells a pretty brutal story. It shows how PepsiCo's stock has done compared to its direct competitors, and the message is crystal clear. It doesn't matter if you look at the last year, the last 10 years, or even the last 20 years. The company has consistently fallen behind. This isn't just a bad quarter. It's a long, chronic pattern of underperformance. And that pattern, it has had huge financial consequences. We are talking about $40 billion in shareholder value just gone, wiped out in only 3 years. A number that big, well, it's going to get people's attention, especially in activist investors. So where's the weak link? According to Elliott's digging, the problem is right here in PepsiCo's own backyard. Its main business in North America, which is about 60% of everything, is in trouble. The beverage side is losing ground and making less money, while the food division, which used to be unstoppable, is slowing down. Even with the international business doing great, the problems at home are just too big to ignore. Now, this is really interesting. A huge part of Elliott's case points to a major fork in the road these companies took over a decade ago. While its main rival, Coca-Cola, decided to franchise its bottling, letting local experts handle the trucks and warehouses, PepsiCo went the other way. They brought everything in-house, creating this massive all-in-one system that Elliott says has just gotten too slow and clunky. And this gets to the other half of the problem. For years, the incredible strength of Frito-Lay was like a cheat code. It hid the issues on the beverage side. It was the growth engine that could do no wrong. But as this quote points out, that engine is finally starting to sputter, and it's exposing all the underlying weaknesses in the North American business. Okay, so the diagnosis is pretty clear. Now let's get to the prescription. See, Elliott isn't just showing up to point fingers. They're coming with a detailed 5-step plan they believe will fix things. So Elliott has laid out this clear 5-step playbook. It kicks off with rethinking that entire in-house bottling system. Then they say, you've got to realign the food business, make it leaner. The next steps are all about focus, pouring money back into the star brands, setting brand new, clear financial goals, and finally, making sure the right people are in charge to see it all through. The absolute heart of this plan is something called refranchising. What does that mean? Basically, PepsiCo gets out of the really complex and expensive business of bottling and distribution. Instead, it would sell those plants and truck fleets to local partners. This would free up PepsiCo to focus on what it does best in the world, building and marketing its iconic brands, just like its biggest competitor. And for the food business, the prescription is all about discipline. After years of spending big, profitability, what they call operating margins, has dropped by 433 basis points. That's a huge dip of over 4.3 percentage points. Elliott's plan is essentially saying it's time to tighten the belt, get costs under control, and double down on the core snack brands that really drive the business. So the big question, what happens if PepsiCo actually follows this plan? What's the potential outcome? Well, that brings us to the prognosis and the massive opportunity Elliott sees. This table, right here, this is the before and after shot. Elliott is arguing their plan could completely transform PepsiCo's performance. They see revenue growth jumping from what they call LSD, or low single digits, up to mid-single digits. They see profits expanding much faster. But the real kicker is earnings per share, flipping from -3% to double-digit growth. That leads to a much higher valuation, jumping from 18 times earnings to over 22. So what does all that mean in the end? The bottom line is this. Elliott isn't just suggesting a few small changes. They believe this turnaround plan could unlock more than 50% in value for shareholders. That is a massive claim. And it's all about making PepsiCo not just a company with great brands, but a truly world-class operator once again.
And that right there is the multi-billion-dollar question at the very heart of this corporate showdown. You have a company with an incredible history facing a powerful demand for a totally new direction. Thanks for joining this explainer.